great to have your company on this 11th day of November 2025. My name's Jessica Remy, a market strategist here with Moomoo, and it's great to see you as always. So what happened overnight that is making market news? Well, we saw US stocks roar back with vigor. The Nasdaq 100 jumped 2.2%, attempting to erase last week's 3.1% decline. Stocks like Nvidia rising the most, up 6% overnight. That's an almost complete reversal from their decline of 7.1% last week. Palantir also a standout. Their shares surged about 8.8% up after they slided 11.2% last week. So what's happening? Why the rush to get back in? Well, there's three key catalysts that are now forcing investors back into the markets. And here's what you need to know about that. Firstly, we saw signs that the US government shutdown could be nearing an end. Secondly, we saw supportive commentary come out about the US economy and also the need to cut interest rates. These comments were from two Fed speakers overnight. So basically set a bullish backdrop for the broad stock market at a time when we've got, a lot of companies are reporting stellar supersonic results. There's three S's if you need one. Companies are delivering results, basically showing that their earnings are growing far more than expected. And that's, of course, given that 91% of the S&P 500 companies have reported so far, and earnings growth is up 11%. So great news. In other news, we also saw commodities bounding higher. Gold, a standout, up about almost 3%. It's back above $4,114 US an ounce. So great and well done to those of you who bought back into gold miners. Also seeing other bullish signs further along the commodity spectrum. Silver, which is heavily used in industrial metals, also needed in AI. Silver up almost 5%. Other industrial commodities such as copper up 3%. Copper is now hitting its highest levels in 3 weeks. But let's just focus on something that's contrarian now. Let's think about the Aussie banks. Why on earth are you talking about Aussie banks when big tech is all the rage? Well, great question, and I'll tell you why. So we've just had Australia's 4 biggest banks reporting financial results. And all in all, profit margins, a metric that we look at that determines banks' profitability, well, it stinks. That's right, banks' profits stink. Their profit margins are well under 5%. Australia's biggest bank reported growth. They reported their numbers this morning and they declined. Profit margins declined. So this is a very telling sign. It's not very good, especially at a time when the Nasdaq 100 companies, they're averaging 10% profit growth. And you've got Australia's biggest bank reporting a profit decline. So then let's broaden out the argument and let's think about the banks in general. I've spoken a lot about banks in my time here at Moomoo, and a lot of you would be familiar with, of course, the share trading volumes and the hotness of Westpac, NAB, ANZ. Their shares are trading record all-time high territory, while CBA is down about 9% from its record all-time high. So it's almost in a correction. So the question is, do you buy, hold, or sell? Well, remember I've said throughout history, 3 of the biggest banks, Westpac, NAB, and CBA, they've crashed and they've always recovered from a market crash. That's looking back at the history books through history. ANZ is the only one that has not recovered, but now it's showing, it's coming to the party, and it could be the 4th bank that always recovers from a market crash. Time will tell. But what's really telling is that not one broker out there in Australia will tell you to buy CBA shares, but I am saying that you should consider trading them, not buying and holding, but consider trading them. Why? Well, hear me out. 13 brokers are basically saying CBA is a sell and that you should not buy CBA. But I'm saying when CBA does see pullbacks like it's in now, consider that CBA has historically recovered from a market crash and will probably continue to do so. But the fact that CBA has delivered weaker than expected results today, I think that there could be more pressure on that, and we could have opportunities to potentially buy CBA and buy into a pullback before a potential recovery. Consider adding this into your repertoire of thinking if you are thinking about trading CBA. Now, CBA has had 6 pullbacks on average between 7 to 15% over the past 2 years. And after each pullback, correction or crash, we've seen CBA shares recover, rally, and then hit a brand new record all-time high. So that's why I'm saying, hello, keep your eye on CBA shares. Think about this. Let's think about what happened in February and March this year. We saw CBA shares decline 15%, and they hit about $141, let's call it that. And if you bought at that time and then you held for the rally that we saw recently, and then it hit that new record all-time high back in June, well, if you held over that period, you would have made 35%. So there's a lot to be said about buying the dip into CBA shares. The question is, do you consider buying in? Then let's also consider the other argument. Well, if Westpac and NAB and ANZ are trading at record all-time highs, do you consider trimming your wins off there and then parking them for a potential pullback in CBA before they rally up? Well, that's something for you to consider. Why I'm saying for you to consider adding CBA to your watch list is because it accounts for 11% of the entire Australian share market. This means that investment managers are buying this stock each and every quarter. Secondly, I also want you to consider that 25% of the Australian mortgage market is with CBA. Now, I want to talk about some other stocks to add to your watch list, but I'm just going to touch on CBA's results before we get to the other stocks. So let's just dissect CBA's results. So they did report weaker than expected results, and they basically came out this morning saying, yeah, Aussies are suffering from the rising cost of living, and CBA is also copping it on the nose amid increasing competition. No surprises there. They basically said that the last couple of quarters. So their net profit, unaudited, across the last 3 months through to September hit 2.5 billion. But what's really telling is that their expenses are rising at a faster pace than operating income, which basically spells that their shares could see a further pullback here. The bank, another warning sign that it could come under more pressure is the bank is sandbagging more money for bad and doubtful debts and basically credit provisions. And that hit $6.4 billion. They also wrote down, including in some of that, loan impairments or loan write-downs of 220 million. Basically, this reflects that, yeah, Australia's biggest bank is suffering because Aussies are finding it hard to make ends meet. I'm just repeating the same messaging over and over again. But CBA specifically said that they are really cautious about the geopolitical tension and the global macro uncertainty. Consensus, as we said, consensus is that CBA shares are a sell. Do keep in mind that they could come under further pressure here, but if you are looking for a trade, keep your eye on CBA shares and potentially look to take profits when they rally up because they have a history of doing that. The second stock to add to your watch list is back in the US, Rigetti Computing. Rigetti, the quantum computing company that's collaborated with NVIDIA, they reported results overnight and they broadly appear to missed expectations. So what is telling that you do need to know? I want you to think about their quarterly revenue, though. They still are reporting massive milestones. So the quarterly revenue jumped from 1.8 to 1.95 million. That missed expectations. But if you take a longer term view and consider that the company's got a very strong pipeline and yearly revenue is expected to continue to grow up and hit 17.2 million in a year. So I wonder, I think a lot of investors would be participating now, maybe buying into some weakness to participate in potential long-term share price growth. Consensus says the stock is, I guess, a buy, but it basically reflects bullish sentiment in the stock in the long-term view, but its price target is basically suggesting no share price growth. But again, the fact that it's a buy reflects bullish sentiment in the stock. Another stock, a company that reported overnight, was BigBear.ai, and this is a software platform AI company, and they're building out platforms for the defense and national security agencies in the US, and their shares are 12% higher in after-hours trade, and they have delivered far better than expected quarterly results. The company's shares have done really well this year. They're up 28%, and that basically reflects hopes that they're going to continue to more sales deals. Speaking about sales deals, their recurring revenue goes to $25 million. It doesn't seem like a lot, but it is 6 times greater than the prior corresponding period's revenue. Another couple of fun facts for Big Bear. They have 100,000 users, 16,000 government teams, and they have hundreds of commercial companies under contract. Consensus says that Big Bear is a hold. Plenty to watch and consider.